Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you can join us today. Before I get to today's guest, I'd like to thank our 2023 President's Council sponsors. These are companies that have provided our association a tremendous amount of financial support this year. In large part goes to helping support our advocacy efforts because, of course, we are the voice of the California mortgage market here in California, address all legislation before the California State Legislature. So I want to thank our President's Council sponsors this year. That is AmeriHome, Arch MI, Consolidated Analytics, Funding Shield, Rocket Mortgage, and Western Alliance Bank. Thank you all for your support in 2023. We look forward to working with you. And with that, I'd like to turn it to today's guest, a gentleman that I've had the pleasure of getting to know over the last few months, and I'm happy that he could join us here on Connect. It's Tom Wight, Vice President of Mortgage Banking at KeyBank. Tom, welcome.
Thanks, Susan. Thanks for having me.
Yeah, I do always like to kind of get these started with a little background on how you got into this business. So why don't you share with us your path into commercial mortgage banking?
Sure, yeah. So I had kind of a circuitous route into this job. I guess my interest in commercial real estate started when I was an undergrad, and there was a lot of talk about real estate at the time. So this was kind of 03, 04, not to date myself too badly. But I knew I wanted to do something in commercial real estate. I didn't exactly know what. That kind of led me to take an internship with a boutique commercial real estate agent in LA, and kind of got my feet wet. And then that led to a full-time job as a commercial real estate agent right after I graduated. And then I didn't, I'm from the Bay Area, so I wanted to wind up here and grow my network here. So I moved to the Bay Area, and it was a great time to move to the Bay Area and be in commercial real estate. It was right when the financial crisis hit, and so
like winning.
Yeah, so it was perfect. I'm like, maybe I shouldn't have quit my computer engineering degree to go to economics, but anyway. So I was doing a couple other things, and then finally. I had a buddy who worked for a family office, and they owned a bunch of industrial properties. And so I was essentially working for them for several years, managing some of their properties. And I have a great respect for property managers because I know how hard that job is. And it wasn't my calling. And I knew that I wanted to do something in commercial real estate, but not necessarily that. And I thought that what that thing had to do with financing the properties in some way, and I didn't really know what that meant. But I knew I needed to get a little bit extra help from an educational standpoint to do that. So I went and I got my MBA, and in the process of that, Berkeley has a great network for real estate professionals, commercial real estate professionals. And actually, one of my professors happened to be a managing director of a large mortgage banking firm in the city, and that's how I got my start into commercial mortgage banking. And it's a great industry, great people. I've been in commercial mortgage banking for about 10 years now, and recently moved over to KeyBank this year. Moved over to the dark side, as some like to say, on the lending side, and that's allowing me to focus on just multifamily permanent finance, which is kind of our bread and butter. So
yeah. So if I
story.
don't miss my bet, was your professor Dennis Williams at Berkeley?
Yes, Dennis Williams, Dennis, exactly.
He's been doing that for a long time, and what an incredible gift to the industry, because he's so knowledgeable, and sharing that at the at Berkeley is I think something he's been doing for a long time. So that's interesting. I didn't know that about you, but Dennis has been a part of the organization for a long time. So we're in a year 2023, interest rates ticking up. You just said you focus mainly on multifamily finance. How do you see that asset class faring this year?
So I'm going to caveat this with the same thing everybody says when they get asked questions like this, which is I don't have a crystal ball. But that being said, I am reading things that much smarter people are writing about this. And I personally think that it's going to be a mixed bag with multifamily. So there's definitely some headwinds, but there's definitely some reason to be optimistic if you're in that multifamily space. We'll start with the bad news. There's a lot of new multifamily supply coming online this year, a lot. And part of that is because supply that would have come on the last couple of years was delayed by the pandemic. And so it got pushed out to this year or even next year. So that's extra supply is going to impact probably rental growth rates. It's probably going to increase vacancy in some markets that are overbuilt. And also just the higher interest rates, as you mentioned, are going to affect the business plan of these multifamily developers. It might be a tough road for some multifamily developers in order to get these deals to pencil. So that's kind of what I see as the bad news. The good news is, well, I guess you can't really call it totally good news, is that with the higher rate, there are probably going to be fewer homeowners, fewer people that are going to be able to afford to buy a home because the interest rates are higher. So I hate calling that good news, but from a multifamily perspective, that means that those individuals are going to have to rent, either rent for longer or they're just going to need to start renting.
Right.
And then also with the higher interest rates, again, going back to what I said about the multifamily developers, there will be fewer deals coming online in the future because it's going to be harder to get those deals to pencil with the higher interest rates. So that means less supply in the future. And then, kind of the overarching theme here is that California, as you know, is still in a huge housing crisis, right? So despite everything that's happened, San Francisco vacancy is still below 5%. Sacramento vacancy is below 3%. LA is below 4%. So those are all very full markets, and I think that they can withstand the impact of some additional supply. But the bottom line is that every property type in commercial real estate is going to feel the effects of the rising interest rates. But I believe multifamily will be less impacted than others. And going back to what I do, in terms of financing these properties, there's always going to be capital available to do that, thanks to Freddie Mac and Fannie Mae. And each of those organizations has, I think, a mandate to put out $75 billion each this year in permanent multifamily finance. A lot of that focused towards affordable, and so it's essentially an endless supply of permanent financing for multifamily, which bodes well.
Yeah, that's great. So you just mentioned, you'd recently moved from a commercial mortgage broker to a national bank.
Mm-hmm.
What are some of the kind of similarities or differences in those two roles?
Yeah, there are a lot of similarities. There are a lot of differences. So to those listening to the podcast or watching that are looking to either make a career move from residential mortgage to commercial, or just looking to get into the industry, you can't really go wrong either way. I mean, as a commercial mortgage broker, I was looking at all kinds of different deals. I was arranging debt for all kinds of properties: industrial, multifamily, office, even some special purpose, like a car wash, for example, or a car dealership. And so you see a lot of different kinds of deals. You see a lot of different kinds of business plans, different strategies. You meet a lot of different kinds of people, which keeps it interesting and keeps it fun. And you also get to work with a lot of different lenders and get to understand what those different lenders do and how they all are incorporated into this commercial mortgage ecosystem. But at KeyBank, what I'm doing right now is really just focusing on one thing, which is multifamily permanent finance. And I actually like that because I like being able to just get really good and knowledgeable about one thing and making it very clear to our clients that that's all I do. So an interesting side effect of that is that some of the mortgage broker friends that used to be competitors really are now collaborators. So another organization I'm a past president of, Bay Area Mortgage Association. I've met a lot of friends with that group, and a lot of those friends are now able to send me deals as the lender. So that's kind of an exciting thing, having only been at KeyBank for less than a month now. So I'm excited to suss that out.
Yeah, kind of see both sides of it there.
Mm-hmm.
And you kind of brought me to my next question. One of the things that impressed me most when I first met you, which has just been a few months ago, was that you are an incredible networker. I mean, you have a very strong professional network, and I think that you put some time and effort into that. And what advice would you give kind of a newer entrant into the market about how they can build their professional network?
That's a great question, and I was in the same position as probably a lot of folks are in right now, where I'm new to the industry, let's say, and I don't know anybody, and I don't even know who I should know, right? It just takes time. And my first piece of advice is go to events. Find out what the local organizations are, whether it be California MBA, ULI, NAIOP, to name a few. They all have events almost monthly, and a lot of those events are fairly inexpensive. You can get your company to pay for it in a lot of cases. Go to those events, and you'll meet people there. And the more people you meet, the more comfortable you'll become going into those events, to the point where now I feel like I can walk into almost any room and I'll know some people in there. Not to brag or anything, but I've been doing this for about 10 years. And so over time, you make those connections, and don't just stop there at the event. Once you've connected with somebody and you've exchanged business cards, don't just throw that business card away. Follow up with that person, grab a coffee with that person, get to know that person at a more individual level, because that's really where the relationship gets built. If you just meet someone in passing at a networking event, that's great, but they're probably not going to remember you. But if you sit down and have coffee with them for a half hour, they'll remember you, right?
Right.
So that's kind of if you're dipping your toes into it and you're thinking ahead, that's where I would start. And then eventually, once you've gone to a lot of these events and you figure out what organizations work best for you, try to get onto the board of the organization, or try to get onto a committee. And that's something that Dennis Williams, as a mentor of mine, recommended early on. And so I've been on a lot of different boards, a lot of different committees, including on the board of California MBA now. And it allows you to see into that organization, figure out what people in the industry are doing, but also gives you some credibility, right? It gives you some credibility so others see, oh, Tom's on the board of the California MBA, so he must know something about mortgage banking in California. So that would be my advice to anybody looking to get into networking. It just takes time.
Yeah, you're right though. It's like, take advantage of the opportunities. Like, don't be like, oh, I don't want to go to that networking event because I kind of had a long day. It's like, it'll take 45 minutes. Like, really just go there. The person that you meet might be, key to the, a next deal or a long-term business relationship. So I agree with you. I think networking in this industry is
just show up.
Very key.
Yeah, I mean, half the key to success is just showing up, right? Just showing up when someone else doesn't, and
that's right.
You'll naturally meet people. And by the way, and getting on the board is generally not as hard as you would think, because a lot of these boards are looking for new people to bring on. It's generally a volunteer position, and people sometimes get burnt out and want to roll off. And if you can go in and make meaningful contributions at that board level, then that opens up doors for you as well. So
yeah, and fresh ideas. Organizations are always looking for fresh ideas. I mean,
exactly.
We have the we're fortunate to have some board members that have been with us for a long time, but having new people like you involved, like you and I have already talked. I mean, there's so many things I'm going to learn from you as far as experiences that you've had, successes you've had at other associations, so that we can continue to grow in the value for our organization.
Absolutely.
So we did mention you just joined our board of directors, and I really look forward to working with you. But can you share with our listeners why you would value the membership in the California MBA?
Absolutely. So the California MBA is a unique organization. It offers some things that other groups don't. And the first thing, obviously, that's a big part of California MBA is the networking component. And it's great because there are events, smaller regional networking events where you can get to know sort of your local industry a little bit better. And then there's also the big signature conference that everybody talks about, which is in Vegas, the Western States CREF conference, which I highly recommend going to. You get to meet all kinds of people in the industry. And by the way, if you want to learn, if you're in residential and you want to learn about commercial or vice versa, it's a great opportunity to do that. I don't know of any other group that has that. You have that ability to learn about the other side.
Right.
And the other thing that I think is pretty unique to California MBA, which Susan, I know you've been working on this for a long time, is advocacy for the making sure that state legislation isn't passed that impacts commercial mortgage, the commercial mortgage industry, if it's meant for single family or residential mortgage industry. So I know we employ lobbyists, we employ other counsel to take a really hard look at these bills that are going through in Sacramento and making sure that, oh, this isn't going to impact, or this is going to impact commercial mortgages. We need to make sure that this gets removed from the bill, or make sure it at least is brought to light and could be voted on. So I think that that's great. And that's something that, Susan, I know I told you that I'm really interested in learning more about. It's just great to get, to basically improve your knowledge overall of the commercial mortgage industry with having that other side to it as well. So those are a couple things that I really like about California MBA, and I'm really excited to be on the board.
Wonderful. Yeah, well, we are really looking forward to working with you. And thank you so much for being on the Connect podcast. Appreciate that. I know everybody's busy, so I always appreciate everybody's time that they spend on this. And thanks to all of you for joining us today. I hope that you enjoyed today's episode. If you'd like to access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week's edition of Connect. We look forward to seeing you next week, and thank you for joining us.